Today is Thursday, the 30th of July, and coming into the market open today after yesterday FOMC day, which was a big day in terms of providing the market with a little bit more clarity in terms of the direction that it wants to go. And even though there were no real comments in terms of Walsh providing new information to the market, he did reiterate the fact that the key goal for them, the Fed right now, is to hit their 2% inflation target, and it's currently at around 3.5%. So there's still the potential for, I guess, hikes to come as opposed to cuts. And that is also supported by the fact that inflation risks remain based on what's happening between Iran and US and oil. And this time around in this FOMC meeting, 3 of the board did opt for hikes as opposed to cuts, or as opposed to maintaining where they're currently at, as opposed to last time in June, the last meeting in June, where it was a unanimous decision to maintain. So it shows that the board's kind of leaning to more towards hikes moving forwards, and that would definitely be supported based on everything that's happening in the market right now. And as a result of that, the S&P, in my opinion, this is if it's not a character changing bar, it's as close as you're going to get to one, based on not just the size of it, but the location in terms of where it happened. The S&P was holding up relatively well for the most part, and over the last kind of week or so, it did lose its 50-day moving average, but it was holding these lows relatively well. And yesterday was a clear close through those lows, as well as breaking this trend line, and that coinciding with the fact that the 10 days below the 50 and looking like the 20 will follow that relatively soon, potentially in today's trading session or tomorrow's trading session. It is another crack showing, revealing itself in terms of the direction that the market wants to go. It's looking like the downside is far more vulnerable to what it was, I guess, kind of like last week or even just earlier in the week. And just looking at the Nasdaq, again, closing near its lows and making in new lows for, what is it, 5 consecutive trading days now, or even more than that actually. It's it's 5, 5 consecutive trading days, and it's looking like the higher time frame moving averages are at least going to be tested. Maybe not this week, but potentially in the coming week. And it's lining up with this SR level here. It makes sense that the price will come in and test this level from the upside. But ultimately, it's in my opinion, it's kind of just mirroring what the Kospi is doing. And even though it's not as dramatic in that sense in terms of the move that it's made to the downside, nearly 44% for the Kospi, a little bit less for the Nasdaq, but ultimately it's looking like it followed the same trajectory based on the tech heavy dominance in terms of the stocks that it comprises of. So the Dow Jones is another one that was, I guess, is a clear character changing bar. The actual character changing bar that came in for the Nasdaq, which did start the chopping period, was on the 5th of June, and the one that we put in yesterday was clearly bigger than that on the 5th of June for the Dow Jones. And additionally, the place in which it happened is I guess feels more significant. It touched its 50-day period moving average for the first time since it was initially reclaimed back in April, and again just showing that actually all of these 3 prior days of strength coming into yesterday have just been completely erased. All of that movement was completely erased just in one candle. So that's a clear sign of weakness to me, in my opinion. So what I'm going to be looking out for today is basically how much of this move. I don't expect follow through to happen immediately, but what I kind of do expect is some sort of relief towards the upside. And what I want to see is how much relief actually happens towards the upside. If it's negligible, if there's barely any movement whatsoever, that wouldn't be a good look. if it completely retraces, that'd be more constructive for sure. But coming into today and coming into tomorrow as well, that's kind of what I'm looking out for. And notably as well, it's the last trading day of the month tomorrow, so really I'm not expecting too much. The VIX did see a little bit of a spike yesterday and kind of making new highs again over the past few trading weeks. Nothing major, but definitely something to pay attention to. Bit of a pullback for the dollar yesterday. I would have thought that it would actually push higher based on the FOMC comments and the I guess increased likelihood of hikes coming in, but I guess it's no real major move. Is still kind of just in this range bound environment. The leading kind of sectors at the minute in terms of healthcare, it didn't see any follow through yesterday, but still remaining strong. Similarly for financial sector, the energy sector is holding near its highs as well. Slight bit of a pullback, but is holding this level, which is pretty key. So I'm going to be curious to see kind of the direction it goes from here. If it does decide to break out and take this level, then I think that would kind of paint the picture that actually the overall equity market is going to come down even more. No real moves in precious metals. Oil had a bit of relief yesterday, but no follow through as of yet. And another in line with the energy sector, it's a kind of an inflection point in terms of, okay, so it's in the middle of this area here. It's a bit of a SR level as well, but for the most part, I want to see if these lows hold or if this high holds. If this high gets taken, then I think it's well, yeah, it wouldn't be a good look at all. In terms of breadth indicators, nothing really to gain from it. More number of stocks above the 20-day moving averages, relatively flat, still hovering around the midpoint. The number of stocks making new monthly highs did pull back a little bit yesterday, but in no similarly to the number of stocks making 52-week highs, kind of just in no man's land for the most part. The number of stocks making new 52-week lows has made its highest reading that it's made in the past 5 trading weeks. So that is something to pay attention to, and just to support kind of what's being shown there. The number of stocks that are down on the day, 4% down on the day yesterday, had its highest reading since the character changing candle that happened back on the 5th of June, which was 972. So that's a significantly elevated reading. So it's the highest reading that we've had since then. And even though there was a bit of chop over the last couple of days, which makes sense coming into FOMC, this is another clear indication that the bears are in control, and there's no signs of strength underneath the surface as of yet. So lastly, just looking at the US bond yields, no real movement on the lower time frame yields, but more importantly on the higher time frame yields. The 30-year is finally taken out these highs that it made back in May, so it's starting to push higher again. And it was a pretty strong day yesterday for the 30-year. Nearly a 2% candle there, or just over a 2% candle there, and breaking out above these highs here. So clear kind of breakout, and isn't the best look in terms of the market wanting to deploy capital or go risk on anytime soon. So what I'm going to look out for now is basically what happens over the next 2 days coming into this weekly close and monthly close. I want to see some sort of relief come back in, and these daily candles that came in yesterday get retraced fairly convincingly. And if that doesn't happen, then I would expect more downside to come over the next kind of trading week, and then into the month of August, which is typically a quiet week anyway, a quiet month anyway, considering is usually where people take some holidays. and yeah, time away from the desk. So coming into the market open today, I'm definitely neutral after yesterday. No real cause or real reason to get overly bearish here, but at the same time, I'm not. I can't say that I'm bullish either. So yeah, just neutral coming into the market open today, and just in a state of kind of just trying to gather some more information so I can have more of a bias coming into next month.